the past few years, mortgage rates have increased drastically, causing many homeowners to lose their homes to foreclosure. However, there are options available to save your home. One such solution is a loan modification. Loan modification programs may help you lower your monthly payments and in some cases stop foreclosure proceedings. If your mortgage payments are too expensive, you have an adjustable rate that is above 6%, or your home is worth less than your mortgage, then you should consider a loan modification. Kevin Heipel, an attorney with Heipel Law, is here today to answer your questions about loan modifications. So thanks for being here.
Sure.
So explain then, what is a loan modification?
A loan modification is adjusting your current mortgage to where the first mortgage payment is less than 31% of your gross income. So to use easy numbers, let's say your gross income is $10,000 a month. In that situation, your first mortgage payment should be $3,100 or less. If it's above that, then it's considered too high and it may be eligible for a loan modification to reduce it down to the $3,100.
All right, can you explain then what is HAMP?
HAMP stands for Homeowner Affordability Modification Program, and it was a federal program introduced by President Obama a couple of years ago. And basically it says if you hold a Fannie Mae, Freddie Mac loan and your income and your mortgage is to where it's over 31%, you are entitled to a modification, assuming it's feasible for the bank. And so it's a federally backed program that almost guarantees a loan modification to some people.
All right, what if you don't qualify for HAMP? Are there other options?
There are, and surprisingly, a lot of people don't qualify for HAMP because they don't have a Fannie Mae, Freddie Mac loan. But the banks, the mortgage companies have loan modification guidelines through their private investors. So what you'll do is you'll send in a loan modification under HAMP, and that's typically denied, or if it is denied, then you go back to the bank and you say, look, review me under your private investor guidelines to see if I qualify for a loan modification then. And that's where we're seeing the most success with loan modifications right now.
How low can you get your interest rate then with a loan modification?
Under the federal program, it goes down to 2%.
My goodness.
And it stays at 2% for 5 years. Then it increases 1% a year after that, and it caps at 6%. So, you know, if you have a mortgage above 6%, the good news is you can bring it down. You'll never go higher than 6.
Yeah, that's a great program. Now, how about someone that's, in foreclosure, or maybe they're just behind on their payments? Can they still do a loan modification?
Absolutely. That's the time to do it, because one of the elements of a loan mod is financial distress, and missing your mortgage payments is evidence of that. And so once you get the loan mod approved, if you're in a foreclosure, they'll stop it. If you're behind on the payments, they'll work on catching you up.
How about someone that has an ARM? Can they turn that ARM into a fixed rate?
Absolutely, and that's a great thing about a loan modification program, is that a lot of the banks right now are taking those adjustable rates and locking them in at current mortgage rates, which are about 5%.
And you actually offer free consultations.
We do. We offer free consultation on loan modifications so people can come in. We can show you how the program works and make a decision if it's worth pursuing.
What else sets you apart then from other people that are doing these loan modifications?
Well, the one thing that we do that's different is we actually break it into 2 segments. So a lot of the providers out there want the whole fee to go through the process. What we do is we take a third of the money up front and we do an analysis to make sure it's even worth pursuing it. And if it's not, we'll tell you, hey, you know what, it's just not worth spending that extra money to go forward. But if the numbers look good, meaning you satisfy the net present value test, then we'll say, you know what, it is time to go forward. Let's pursue it. So it's a 2-step process. It saves you money, so you're not putting all your money on a loan modification that's doomed to fail from the beginning.
Excellent. Well, as always, great information. Thanks for sharing this. I do
Sure.
want to let our viewers know, too, you have a great rating, an A rating with the Better Business Bureau, so congratulations on that.